Welcome back to Investing Talk Podcast. Today we're diving deep into a question many of you have sent our way. Is Recursion Pharmaceuticals, is it a good time to buy now?
Yeah, it's a hot topic. We've pulled together a pretty comprehensive analysis looking at, everything from their fundamental health to market sentiment, really trying to give you a clearer picture.
Right. Our mission for this deep dive is to unpack the current landscape for Recursion Pharmaceuticals. We'll look at its potential, sure, but also its risks so you can walk away with the insights you need to decide if it actually aligns with your investment goals.
Exactly. We'll explore why this AI-driven biotech company is generating so much buzz. It's quite interesting. But we also need to talk about why caution is definitely advised for some people.
Okay. Before we dig in, if you find this deep dive helpful, please take a moment to subscribe, like, and maybe comment. We love hearing from you.
Absolutely.
And if you'd like to support what we do, consider buying us a coffee. Your support really helps us keep bringing you these in-depth analyses.
It really does.
Okay, so let's pull back the curtain on Recursion Pharmaceuticals. It's a name we hear a lot, clinical stage biotechnology company. But what's their secret sauce? What makes them stand out?
Well, what's really fascinating, I think, is their focus on AI-driven drug discovery. They use this proprietary AI platform, it's called Recursion OS, to essentially speed up the whole drug development process.
Speed it up.
How significantly?
Potentially very significantly. I mean, this could be a truly disruptive innovation in the traditional pharma R&D space. It's a very different approach.
Yeah.
Modern.
Gotcha. So that's a key point. They're not actually selling drugs yet. So that AI platform, that's the real asset right now. That's where the value proposition is.
Precisely, yeah. They generate little to no revenue from marketed drugs currently. Their core value, what makes them attractive, is absolutely rooted in that AI platform.
And they've actually licensed it out already to major players like Roche and Genentech, so that that signals some credibility, right?
Yeah.
And it also points towards, promising future revenue potential if those collaborations work out.
But what does this mean for their current financial health?
Yeah.
If they're all R&D and no sales, that must hit the balance sheet hard.
Oh, it absolutely does. As a development stage company, they are, well, unprofitable. They have negative cash flows. That's not really surprising, though.
Right, typical for biotech.
Exactly. Very typical for clinical stage biotechs, heavily investing in R&D. But here's the critical insight for you as an investor. Recursion isn't just unprofitable. They're burning cash. So their cash runway, how long they can keep going without needing more money, that's the clock you really need to watch.
Okay.
Now, specific debt details weren't readily available in what we looked at, but they did announce a 20% workforce cut recently. Yeah, and that definitely suggests management is actively trying to manage expenses. Maybe because of a limited cash runway, or maybe just operational adjustments to streamline things.
Okay, so they're burning cash, no profits yet. How do we even start valuing a company like this? You can't just use a standard PE ratio, can you?
This raises a really important question, and you're spot on. For this kind of company, PE is, well, it's basically useless. Traditional metrics like price to earnings just aren't meaningful when you have negative earnings.
So forget the standard playbook for valuation here.
Pretty much, yeah. It's out the window. And we also didn't find specific discounted cash flow data, which is another way people try to value companies.
Right.
Relative valuation is also tricky. I mean, biotech startups like this, they're focused on the pipeline, on clinical milestones, not current revenue. So comparing them to companies with actual sales is difficult.
So you're betting on the future, essentially.
Exactly. The fundamental insight is you're investing based on tomorrow's potential breakthroughs, not today's profits. For Recursion, you're kind of valuing a high-tech lottery ticket, the jackpot being a potential medical revolution.
Okay, interesting way to put it. So we get the tech, the financials.
Yeah.
Where's the market at on Recursion right now? What are the shares actually doing?
Okay, so shares are currently trading around $4.90.
And how does that compare?
Well, putting that in context, it's down quite a bit. It's roughly 27% down year to date, and it's over 55% below its 52-week high, which was up around $12. So yeah, it's been a rough ride down from the peak.
Definitely not for the faint of heart then.
Okay, we've looked at the fundamentals. How's the market actually digesting all this? Let's switch gears, look at the charts. What's the recent price action telling us?
Well, the company's seen significant volatility in 2025. I mean, really big swings. And there's been a notable downtrend in the share price, falling from those highs near $12 down to below $5 recently.
Wow. Yeah, and just on July 7th, actually, there was a reported 7% drop in a single day. So that gives you a sense of the recent pressure, you know?
Yeah, it definitely shows the swings.
Yeah.
Are there any key technical levels people should be watching, especially if they use charts for timing?
Absolutely. So the 50-day moving average, which is kind of a short-term trend indicator, is sitting right near the current price, around $4.89.
Okay, so maybe some support there.
Maybe it could act as a potential like trampoline for a short-term bounce, but here's the kicker. The 200-day simple moving average, that's our longer-term health check, right? It's much higher, around $6.31.
That's quite a gap.
It is. And that wide gap isn't just divergence, it's kind of a warning light. It signals entrenched, longer-term downward pressure. It suggests any bounce might just be, well, a bounce, not a real reversal yet.
Hmm. And what about momentum indicators like RSI?
The Relative Strength Index, RSI, is currently pretty neutral, sitting around 57, so it's not screaming overbought or oversold right now. Doesn't give a strong immediate signal either way based on momentum extremes.
Okay. And broader indicators like MANA-D. And what about just the general feel, the volatility? What kind of ride are we talking about here?
Well, MANZD and RSI data generally suggest mild neutral to maybe bearish momentum, kind of reinforces that longer-term downtrend we talked about.
Right.
And importantly for you, volatility is quite high. It's running around 8.5% right now. So if you're considering this stock, you're not just buying shares, you're basically signing up for a roller coaster ride.
Good to know. Prepare for swings then.
Definitely. The price can move a lot very quickly in either direction.
Okay, so we've got the unique tech, the tricky financials, the choppy charts. What's the word on the street? How are analysts, the market generally viewing Recursion right now?
It's a bit mixed, actually, but generally leaning positive from analysts, which is interesting given the price action.
Really? Positive.
Yeah, for example, Morgan Stanley recently cut their price target down to $5, but, and this is key, they kept an overweight rating.
Which means they still think it'll outperform.
Basically, yeah. They expect it to do better than the average stock in its sector or the market, even with the lower target. And the overall consensus from, I think it was 10 analysts, is actually a buy rating, though the price targets vary quite a bit, somewhere between $7 and $12.60.
Interesting disconnect between analyst ratings and recent price action.
Yeah.
Any big company news that swayed sentiment lately, beyond just market stuff?
Yes, definitely. That 20% workforce reduction we mentioned, that caused some short-term ripples for sure.
How so?
Well, the company framed it as improving operational efficiency, managing costs. But the market can sometimes read that as maybe a sign of financial pressure or slowing growth, even if it's meant to strengthen the company long term.
Right, perception versus reality. And overall market sentiment, not just analysts, but the broader mood. Fearful? Greedy?
Right now, it feels broadly bearish, or maybe fearful is a better word. If you look at things like the fear and greed index for the whole market and just general social sentiment online,
Yeah.
it reflects a wider investor wariness. And in this kind of climate, speculative stocks like Recursion, the ones without profits yet, they often take the biggest hit from that caution.
Makes sense. Okay, let's look ahead then. What could actually move the needle for Recursion? Catalysts, positive or negative? And let's nail down those risks again.
Okay, catalysts. Short term, you're looking at potential news flow. Earnings reports are always key, obviously. Also, any data releases from their clinical trials, that's huge in biotech. Or even just updates on those licensing deals with Roche and others. Any of that could cause pretty big sudden price moves.
And longer term, what are the really big things that can change the story?
Long term, it really comes down to successful clinical trial outcomes. That's the make or break for most biotechs.
Getting drugs approved.
Exactly. New drug approvals would be absolute game changers. Also, expanding the licensing deals for their AI platform, getting more partners using Recursion OS. And then there's always the possibility of, M&A activity, mergers or acquisitions in the AI biotech space could totally change the valuation picture. Those are the big potential upside events.
Oh, and what about things outside the company? Macro factors. Do interest rates and stuff like that matter for a company like this?
Oh, absolutely they do. The performance of the whole biotech sector matters. It tends to move together sometimes. And yes, interest rates definitely influence flows into speculative stocks like Recursion.
How so?
Well, when rates are higher, investors often get a bit more risk averse.
Yeah.
They might prefer safer investments over companies that aren't profitable yet and need a lot of future funding,
Oh, okay, now let's hammer home the downside.
Yeah.
What are the really big risks you're signing up for here? You called it a lottery ticket earlier.
Yeah, and that brings up the crucial question for you. What exactly are you getting into? The stock-specific risks are pretty substantial. Well, number one is clinical trial failures. That's always the big one in biotech. It can just crater a stock overnight. Then there's the ongoing cash burn we talked about.
Meaning they'll need more money later?
Almost certainly, yeah. Which means future capital raises, and that can dilute existing shareholders if they issue more stock. There's also execution risk. Can they actually turn this cool AI platform into a real scalable business? And don't forget regulatory hurdles. Getting drugs approved is a long, tough, unpredictable process.
And what about risks beyond just Recursion itself, sector risks?
Yeah, the whole biotech sector is notoriously volatile. It's probably one of the most volatile sectors out there.
Right.
Investor sentiment can swing wildly, and the funding environment for these companies can dry up or flood in, really impacting valuations across the board. Plus, broader market downturns or rising interest rates, as we said, tend to hit these high volatility, loss-making biotechs harder. And like we saw in the charts, the stock itself is very volatile, meaning higher trading risk if you're not prepared for those big swings.
Okay, so we've covered a lot of ground, bringing it all together. What's the verdict on Recursion Pharmaceuticals? Is now, a good time to buy for our listeners.
Okay, stepping back. Our overall take is that Recursion is definitely a speculative play. High risk, but potentially high reward AI biotech stock.
The lottery ticket idea.
Sort of, yeah.
Right.
Its innovative AI platform and those pharma collaborations, they offer real promise. There's a solid foundation there. That's why, in our analysis, we give its fundamentals a 5 out of 10, and its potential catalysts maybe a 6 out of 10. There's genuine upside if their tech really changes the game.
There's always a but, isn't there? It sounds like there's some serious headwinds blowing right now.
Absolutely, you're right. The shares are clearly under pressure, partly from their own restructuring, like that workforce cut, and partly from just the general negative sentiment around the biotech sector right now.
And the lack of profits.
And the lack of profits, yeah. Plus the high volatility we keep mentioning. So putting numbers on that, we'd score its technicals and sentiment maybe a 4 out of 10 right now. And its overall risk profile, probably a 3 out of 10, mainly reflecting that volatility and the speculative nature of being a pre-profit biotech.
Okay, so 3 out of 10 on risk. Pretty high risk then. What does this all mean for you, the listener, considering Recursion? Who is this stock actually suited for?
Right. So our overall rating, blending all that, comes out around a 4.5 to maybe 5 out of 10. It's really more suitable for long-term investors, people with strong conviction in that AI-driven drug discovery story.
And patience.
And patience, exactly, and a high tolerance for risk. You'd need to be willing to withstand significant near-term volatility, maybe even losses, and look out 3 to 5 years. It's a bet on the technology's future.
So probably not for short-term traders.
Generally, no. Not ideal for short-term trading, given the high volatility and the current bearish near-term trend. Although, some high-risk traders might try to play the swings, but you need really tight stop losses and a clear exit plan. It's risky.
Understood. For those long-term investors, though, the ones with the conviction and risk tolerance,
Yeah.
is there an entry range that looks reasonable based on the charts?
Well, looking at where things are now, a reasonable entry range might be somewhere between, say, $4.50 and $5. That's where the current price is hovering, and it's near that 50-day moving average, which could offer some support.
Okay.
For traders, if you were to try playing it, maybe consider a stop loss around $4 to limit your downside if it breaks lower, and maybe target the $6 to $7 range for short to midterm gains, kind of aligning with some analyst targets. But again, strong caution, disciplined risk management is absolutely key here.
Got it.
Look, the promise of AI and drug discovery, it's immense. It really could be revolutionary. And Recursion Pharmaceuticals is definitely right there at the forefront, trying to figure it out.
Yeah.
But like any pioneer in a volatile field like biotech, the journey can be, well, really bumpy, lots of ups and downs.
It really underscores how important it is to look past the exciting tech sometimes, doesn't it? You have to understand the actual financial situation, the market realities, the risk involved. It's not just a cool science project.
Indeed. It's a real company with real financial pressures. And this really raises an important question for you, the listener, to think about. In a field like AI biotech that's changing so fast, how much weight do you personally put on that long-term transformative potential versus the current financial stability or lack thereof and the prevailing market mood? Where do your own priorities lie?
Definitely something to mull over as you consider if a company like Recursion Pharmaceuticals fits into your portfolio. Okay, that's all for this deep dive. We hope it's given you a clearer, maybe more nuanced picture of Recursion Pharmaceuticals.
Hope it helps.
Until next time, keep learning and keep investing wisely.